Good afternoon, everyone, and welcome to the FX Daily Roundup. And we have seen the euro come off quite a bit. And to a trade that I was in, managed myself out of that one, was the gold trade. We basically saw almost like a capitulation here. Let me go and move into that quickly. We saw this pair really come off quite a bit and really come under some kind of pressure, really with the dollar index continue to move higher. And I was looking for this to move lower. Look, I mean, made a couple of bucks on the way down, but I was respecting the euro, thinking the euro was going to hold up much far better. So I didn't want to be selling the lows, and we would just drop to a new level. But I tried to pick this thing on the way up, and boy, it really got pretty squirrely to the end, and ended up adding quite a bit on the way down, which probably necessarily wasn't the smart way to go, but was a way for me to, I believed in the trade. Now I'm going to get into the cash dollar index and why I did, but let me go on and move into the main screen. So we're looking at the chat room, and this is the level that I'm thinking that we could potentially go in and stretch to. Was like go and show you here on the daily. Right here at 99.03. You see right here that close, and I always say, I always put my resistance levels through the bodies, because to me that's where it matters the most. So where did we close on that day? Our best close, that's the best we've ever done, was right there, 99, right there, 99.03, 99.04. And you can see that's where we made a run up to. And I thought, well, potentially this pair is going to try and push to that level, and then maybe we can see it rotate lower. That's my thinking with the gold, and why I thought we'd move lower. But once again, boy, things really got a little bit out of hand there, as we basically saw almost like a capitulation type trade. You don't like to throw that term around too often, but at least from an intraday standpoint, or very short-term standpoint, capitulation trade, it certainly was, because we really rolled over. One of the things that we were talking about on the way up, was that if the market, we talked about the significance of this 1529. If we could get a close above there, it would open the door for another leg up. And so we did go on and push higher. Now, this is on the 2-hour, but we saw where the market, let's go and pair back. And we saw here where I was looking to come in right there is the 50%, maybe just a little bit below, and we really saw this market come under. Now, this is on the spot. The futures are trading at about a $7 premium, I believe it is. But we really saw this market come under some kind of pressure here, with the cash dollar really continuing to push higher. One of the things that added to the woes of the gold market is you've seen the equities come back with a pretty good force here. Actually, this is a pretty good area that I was looking at, but I was all mixed up with the gold, so I had no opportunity. But this was an area that I was looking here that I thought was going to be a great area here on the S&Ps, because that would actually go and take a look here on the 5-minute chart for you. I'm all over the place, so apologies there. If you look here, we had come up to the 38% of this entire move here, and the market was kind of struggling with that. They may be able to push it up a little bit beyond that. And I thought if they can take out this high here, that'll be the initial reaction. But to be quite honest with you, this is where I thought potentially we might have shot up to, was take out, run the shorts over here and challenge the 50%, maybe even stretch up to here, and then pull back. I knew that we'd have some initial resistance here, so but that certainly, this ability for the S&Ps to continue to hold up really put the gold market under some big heavy pressure. And you can see the cash dollar index has just been up and away. And the euro, one of the things that kind of upset me a little bit is that I just gave it too much respect. Well, respect in the sense that we have that 110, those 110 options that are going off the board tomorrow, with some pretty heavy duty money there. And we knew the 966 was going to be key. And then we kind of tried to make a hold, and then we tried to hold it again. It kept going lower and lower. I know some people were trying to pick it up on the lows, but it just kept on falling further and further away. And that's the concern, is that if they can't defend this 110, then really this market has a potential to really accelerate lower. And that really put the gold market under some intense pressure. And I didn't want to find myself, and I've done that before. Sometimes you can do it on the first run where you go on and put your stops just right before the lows, and the market will jump down and then pop back up. And sometimes you make yourself a few extra nickels if you're fairly quickly and working in order. But I thought, no, this gold is really trying to hold here. And like I said, then you just saw this market really coming unglued on the way down. I mean, and that 1508.5 is a 50%, but boy, with the intensity of the market, with the dollar index still continually now to push higher, there's a level there at 99.19. It's one of the reasons, thankfully, I didn't stick around. I actually added way more than I should have. I was able to manage myself on the trade, which really wasn't a smart thing to do, but I really believed in it, and I thought that the dollar index would make it to 99.03 and then dip back. Well, we made it to, I think, 04, and then we kind of dipped back, but here we are reasserting ourselves again. And I'm glad I just got out of this, and I did okay, came out okay, but certainly one that you don't ever want to find yourself in a situation like that. It makes more sense to go with the trend of the day and see how far it'll push it. I came out okay, but wasn't the smartest thing. I want to go and take a look at the crude oil market because Jane in the chat room had asked if we could go and take a look at it. And I'm actually going to kind of start backwards. I'm going to start with the 5-minute here. And I actually was trying to get – it's been a tough trade. I think Jane, she's been short for some time and did really well. But this market has just been dripping lower. And one of the reasons I thought that we would go lower, and I mentioned that I think it was yesterday in the webinar, was that with the European PMIs have been so weak, and also we saw consumer confidence and other indicators have been weak, that I thought, well, if Saudi production is coming online, then we should just go on and see this market continue to go and work lower. But this market has just been continually like dripping lower. You finally get a little stand here. I missed this area here, but then you drop back down and then you just drip. Well, we had our data come out this morning, and 55.40 is actually the 78%. I actually was working a limit at the time before we even got there earlier in the morning. I think it was 55.79, and we didn't get there. We came up. I thought we'd make a quick dip and what I call a dip and pop, and we didn't. And then eventually, when data came out, we kept on moving lower and lower, and we didn't quite make it to the 40 either. And I thought, you know what? I think they'll still revisit it. There's actually a trend line there. But they never did, and I never got back in it. And I saw this is, if you look here, is 56.53 is the 23% of this entire move. And I thought, okay, well, I'm thinking that they'll be able to push a little bit higher, maybe make it up to here to 60, and then we'll see a pretty good dip. No. It just barely kind of dinged it, and then we just start to once again slide a little bit lower. So we're going to go and take a look at the 2-hour chart here on crude oil. Let me move to that. So let's take a look at this crude oil. And you can see here, it's just been drip lower. And I mean, Jane, I think she got short around 59 or something, was still short yesterday. That's just not my mindset where I can just hang on to something, especially the way crude can quickly snap back. So I'd rather come in, try and scalp what I can. But this has been a tough week. I mean, it's like I said, I just haven't been, it seems like I keep missing things or something like that, or missing a limit, or just missing, where I think a move will go on and get to. Case in point, like I said, I thought we might make it to 56.60. And once again, just came up short, and here we are lower. But to look at this, and I was looking here, as I mentioned earlier, I was thinking 57, I think it was 55.79. I was trying to work a limit, or 55.80. We didn't quite make it, came up a little bit short, rallied up a little bit higher. I'm thinking, okay, well, as we get in a half hour before the data, I'm not going to be putting on any positions at all, even if they're scalp positions. But I like this 55.40 because that was a 61%. And if you look at all the touches, that's a lot of good volume coming in there. And it also was confluence in here with the trend line, which I really wasn't paying that much attention to the trend line itself. But I was looking at this saying, wow, this will be a pretty good area and I thought also this provides a good area for those that have been short, maybe not from all the way up here, but let's say up in here, this 59, 58.5, even $58 provides a good value area for, shorts to come in and, medium-term shorts to go and cover. And hence why I thought we'd go in and jump back rather quickly. I thought we'd maybe take one more dip, then we come back up and I go, okay, now we can assault it. And even though we didn't take that dip, I thought, okay, well, they'll probably spook it and maybe jump up above the 60 easily. But they didn't do that either. But in the longer haul, situation when you look at economic indicators. I'm talking about European PMIs, also, even here in the States. And then you look at where the equities are, and generally crude, although for different reasons why we've rallied, but generally if you see sustained weakness in equities, it certainly puts a pressure on crude. But I thought even with that, we probably would have got a good bounce back. I thought maybe there was even a chance we would maybe make it up to $57. But we haven't, and it's continued to stay weak. So I guess for those that trade from a medium-term length, they may still be short, probably isn't any reason to cover, and eventually will probably come down here and challenge this 55.40, it would appear. I'm just not seeing anything, at least the way I trade from an intraday standpoint, and I'll move back into that. So here, like I said, it's just been drip, drip, drip. You can see here, nothing happening. The market goes to sleep, and then you fall out of bed, not even that far. Then it's like drip, drip, you come up here. I don't know if I was even up or what the time was on this. Actually, it says 8, and so I guess I just missed it. I don't know, but you can see here, there was a nice little gravestone doji. And once again, I would have thought that we probably would have been able to push up a little bit higher and take out some stops, but then the market just came under pressure, and not any real, that I would say, good setups that you can see here in the crude. So you can see here, for me, the style, the way I try and trade, I try and catch these markets on quick grabs. I haven't been able to come up with anything. A couple of the guys have caught some moves on the way back up, but for me, nothing. But you can see here, look at the cash dollar index. Here's that 99.03 I'm telling you about. And you have a little bit of a gravestone doji, but this is on a 5-minute chart. You're going to give it that much credence. But once again, we do have some 110 options expiring in the euro, and the euro comprises 56.4% of the cash dollar index. So we may go and see the euro come back, but boy, this doggone euro has been under some kind of heck of a pressure. And you can see here, that's why these trade almost inversely. You can see here, which appears to look like almost like a gravestone doji here, but the wick's not that long. And you can see here, like a mini little hammer here in the euro, but it's under some kind of pressure like nobody's business. And really kind of tough, and it's actually put that pressure here in gold. You can see here gold, I still think gold can potentially move another $4 here, but I'm just glad they've been out of the trade. That thing really spun out of control rather quickly. The only thing is I really believed in it. I really thought that we were overdone when I looked at it on the 2-hour chart, and we'll come back to that. I'm trading the futures, but I'm always looking, when we were using the trading view, so I use that and, where I'm going to step in. But as I mentioned, you can see here on the fib, and the market seemed like it was really overdone at the time. And although we had lost at 15.29, I thought this 50% offered a pretty good opportunity there. You see here, here's the 50%, and then just below that, you see right there, some nice support, but boy, the wheels really came off the caboose. Now, we did come back to where this trend line broke, so you can see here, and I thought that was my last bastion. And basically, I had stops below the low, and I go, that's it. I'm going to have to take the loss, and it's going to be actually a pretty good sizable loss, but I had quite a bit, so I not the smartest thing. Like I said, it wasn't a smart play at all to a certain extent. It's better to have your stops in place. But I thought we'd, once again, dip down and snap right back into the range, and the market just kept, unfortunately, it didn't completely fall out of bed in, big chunks, but it just kept rolling lower and rolling lower. And then it got a little bit out of hand as we, got past 15.05. I'm like, oh, this thing is really spinning out of control. How much further can we go? And I'm thinking, we're already past the 61%. We're here at this breakout area. If it gets below 15 on the spot, I got to get out. But that's what the case here with the gold market. And I still think we can move a little bit higher, especially if equities come under pressure and we do go in and rotate a little bit lower. If someone's holding from a little bit longer term, I think we can make a move back up in in gold, and really make a move back up to this 15.15 on the spot, which would be translate to about 15.22 in the futures. I think we can go there, because I think what will happen is the market, if we can get, there may be people that are long, and they'll say, well, if we can get back up to this level, I'll get out. And probably people that are saying, you know what, I'd love to get short. If we can rally back up to 15.15, maybe 15.16 on the spot, which would translate to about 15.22, 15.23 on the DEES futures. Same thing. So I think that there's a potential we can move higher still. It's all going to depend here with the equities, and also if we can see this cash dollar index just weaken. Right now we're at 99.01 in the cash dollar index. So that may allow some further short covering as we move further. I mean, I'm glad I'm out of the trade right now. But I think we can still go another $4 or $5 in this market, especially if we see SPOOs start to weaken later in the day and the cash dollar index come off of that 99.03, which it's doing right now. Let me go on and move into where the equities, not equities, but the FX is. So we saw a pretty good move here in the dollar yen, and we had our bias chart resistance at 769. Now this 788 was the bias chart resistance from yesterday. So it actually took out, you can see our 69 here and challenge it here. So we've made a pretty good little run here. Probably good area for shorts to come in, because you can see right here, we break here, they re-challenge this level. So once again, probably some good opportunity for those to come in on the short side if you figure that equities are continuing, they're going to remain under pressure for the medium term. On cable, we did go in and come into our bias chart support here, and we've gone below that, which is 23.73. So pair continues to remain a little bit under pressure. But if you look at it from the longer haul, pair still bullish overall, but we've certainly gone and dipped back in here with the pressure that we've seen here with the cash dollar index. And let's bring that up once again on the daily. So here's that 99.03 that I was referencing right there. You see, so to me, that's the key right here is the close. So if we were to get above 99.03, that really opens up the door for us to move all the way back up in here. But from an intraday perspective, I thought, man, when things really get looking pretty bleak, I was thinking, man, if this gold makes a move up to 99.19, that's it. That'll take the dollar index makes that move to 99.19. That'll take the gold below 1,500 on the spot, and I'm out and take a pretty good little sting on that. But we basically held there. I think we made it all the way up to size 99.05. We're pulling back. If we can pull back a little bit further, that probably allow the gold to move back a little bit higher. Peso is moving higher, but we do need, finally, it's moving higher. But as I mentioned in the basic technical analysis, we do need, or bulls need, a daily close above 1960. If we can get a daily close above 1960, then we can start to motor higher. I've given this pair the benefit of the doubt because we were able to get above this 1923.6, which is the breakout. On the pullback, we got about as far as we could, which is a 61%. We defended it, which was at 1932. And today's bias chart support, I believe it's 1942. So if we can get a daily close above 1960, we can certainly make a move higher here in the peso. Looking at the dollar CAD, it's just been still relatively quiet. Trading in this range, you can see top to bottom here on the two bias charts, 32.24. 33.07, but we need a daily close above 33.36 to go on and launch us up for the next leg up. But that's all we have here. Once again, keep an eye on this cash dollar index. We did break higher. That really opened the door to pressure this euro lower, and pressure it certainly did. But tomorrow we do have some options expiring at 110, some big high dollar options. So I thought they would be able to defend it a little bit further. And I knew it was going to be in trouble if we got past 990, but I thought we'd probably be able to defend 965, 960, but we kept pushing even lower. So we'll see if the dollar index does take a little bit of a pause ahead of tomorrow's option expiration. That may allow the euro to go in and come back. Resistance on the euro at this point is going to be 977, but we'll see if they can push it higher. But tell you what, if those options go off with this under 110, boy, it's going to be a lot of trouble, and really opens the door for them to press them even lower. That's all we have. Thanks for joining us here on the FX Daily Wrap-Up. Once again, now's the time, like I said, to as we're seeing things heat up not only in FX, but volatility across the board, is to take advantage of our semi-annual offer to get 1 month free. Purchase 1 month, get the next month free, or with the semi-annual, you get a 25% discount, or an annual subscription, a I believe it's a 35% discount. But thanks again for joining us here, and y'all have a great rest of the day trading, and be careful. Don't make any silly mistakes like I practically just made. Good luck.